Thank you, everybody. Thank you for tuning in today, February 10th, 2024. And our topic is how high the home prices will go this year, right? And so as usual, I'll do my quick presentation, followed by our expert panel. Our expert panel is again Kishore, Bhavin, Amit, Prerna, Shihan, and Dinkar. They are mortgage brokers. Sandeep ji, Murarilal ji, and Chris will be our real estate lawyers. Prasoon is our estate planner. Mohit and Bani, insurance brokers and financial advisor. Mohit is financial advisor, and Deepak Sharma and Mustafa are accountants. So any questions, please feel free to ask our expert panel. They have a wealth of knowledge here, and any questions can be answered by them. A quick disclaimer again, as you know, we all try to bring all this information from reliable sources, but we cannot guarantee its accuracy and completeness. So please take informed decision, or please take legal action or advice or professional advice before taking any action. Now, today's agenda. So first of all, January 2024 TREB market report review. So we'll discuss that. And then we'll look back into year 2023 and see how the year went. It was a very interesting year, as you all know. Then we'll discuss the three major key factors that impact home prices, followed by how high the home prices will go in 2024. That's our topic for the day, and we'll try to analyze it. And then, as usual, we'll have our Q&A session. And interestingly, we also would have our $100 gift card giveaway. As you know, Family Day is coming up. Next week is Family Day weekend. So to enjoy the Family Day weekend with family, we also want to contribute a little bit. So we have a $100 gift card, and one lucky winner would get a chance to take their family out and enjoy. Now, let's start. Let's look into our January 2024 market report from Toronto Real Estate Board. So it was interesting. That's the only thing I can say. We sold 4,223 homes in January 2024, which was 37% more than January 2023. It's a big jump, right? So no one was expecting it to be that good, but it really surprised most analysts. But also interestingly, the prices are almost flat. Price in January is about 1% below the January last year. So it's almost flat. So, but we all know what happens when supply shrinks, prices normally rise. So prices normally follow later, right? So now another thing which we always talk about is months of supply, which is actually an indicator about the health of the real estate market. The lower the inventory, it's seller market. Higher the inventory, it's buyer market, right? So as you could see, January 2023, we had three, or actually it should be 2024, we had 3 months of inventory. Sorry, January 2023, we had 3 months of inventory, and now January 2024, we had 2.4 months of inventory. So the inventory has gone down considerably, right? 20%. So lesser homes to sell, more homes are selling. So we need to add more inventory. So this graph shows the unit sales, how many sales we sold in January 2023. This dot here, the purple dot, represents the number of sales in January 2024, which is almost which is much better than 2023 or 2019, or at par with other years like 2020. We are, yes, below the number of sales of 2021 or 2022, which is red and green lines, but those were outliers, right? We all know, we can keep on talking about that. We had very unrealistic market in 2021 and early part of 2022. But beside that, we are now having a good number of sales. So let's look into the overall year for 2023, how it went. In 2023, we sold 65,000 homes, which is a good number, right? How these 65,000 homes were sold? Most, like, it's very balanced. So detached homes were about 30,000. Condos were about 20,000, 19,000 to be exact. Townhouses, 11,000. And semi-detached houses, about 5,700. So, which is not way far behind than 2022 numbers, right? So we had a good solid year for 2023. So that's why we call it interesting year, even though there was a lot of noise about market shrinking, people not buying, there's a lot of inventory. But as we could see, inventory is again at a low point, and we sold again a good number of homes in every category last year, right? So what happened to the average price for the whole year? Average price for the whole year of 2022 or 2023 is 1,126,000, which is about 5% below 2022 average. Keep in mind, this is the average for the whole year, not for a month. For example, the average for last month, for January 2024, is only 1 million and about 25,000. But average for the year of 2023 was 1,125,000. So yes, we have dropped in prices recently, right? But average for the whole year was about 5% below than 2022. But if I compare the average price for 2022 March, April with average price of January of this year, we are almost 20 to 25% below, depending on the different like market segments and different locations. So this is the average price by the home type. All homes have almost gone down equally as we dropped about 5.5% overall. So similarly, detached houses came down 5.5%, condo prices about 5.3%, semi-detached about 5.7%. Only the townhouses went about 4.2%. So townhouses are more resilient than other categories. So that's what it means, right? Now, let's discuss what are the main factors that are going to impact the house prices, right? So the three key factors that impact home prices are, number one, economic factors, number two, supply, and number three, demand. It's very obvious, right? So everybody can, I think, correlate to these three factors. So let's discuss these three factors one by one. So let's first look into the economic factors. So first of all, in the economic factor, we look into the economic growth, which is GDP. So how's our economy doing overall for Canada? Other economic factor which impacts a lot, and we all have discussed a lot in last few months or a year or two, is inflation, right? And third one is interest rates. So let's discuss them again in detail. So economic growth, our economy was slowing down, as we all know, right? Because Bank of Canada was increasing rates. They wanted the economy to slow down, and they were able to bring the economy down. By third quarter, it came down to 0.3%, right? But last quarter, economy again grew more than expected. It again went up about 1.2%. Which eased the pressure on Bank of Canada to cut rates. So it means, because Bank of Canada's goal is to control economy at this moment. They don't want economy to grow that quickly. Because if economy grows, or then people have more resources, more money in their hand, and people will go out and spend. So that's why Bank of Canada doesn't like it. So which means, because the last quarter has seen more economic growth. And as you remember, inflation has already jumped up a little bit in the month of December. So which means Bank of Canada is not going to cut rates quicker. So we don't expect Bank of Canada to cut their rates in the next sitting or maybe the sitting after. So we'll discuss that a little bit later. Now, because of this economic growth, now this is what TD Economics is predicting long term. They are saying in 2025, 2026, this economic growth will sustain. it will come back and stabilize to about 1.8% annually. This is what was normally before pandemic. We were around 2.5%. So they expect it to come down to about 1.8%. And that will be driven mostly by population and labor growth. Productivity still remains behind. And that's why we are not on the right level. Now, this is a graph by Statista, which is predicting what is going to happen to the economy in the next 5 years, right? So 2018 to 2028. So as before pandemic, 2018, 2019, our economy was growing about 2.5 to 2%. But then during pandemic, we shrank. As you know, everything came to standstill. As everybody knows the story, the economy went down 5%. And to boost the economy, as we all know, Bank of Canada reduced the rates. They almost went down to 0% interest rates, Bank of Canada's rates, right? And economy started coming back, and it grew back fast. So it recovered what it lost in 2021. And in 2022, it again had some trickle effect and it grew by another 3.5%. 2023, now we overall expect the economy to grow by 1.29%. Going forward, as per Statista, 2024, 1.61%, 25, about 2.4%, and then regularly about 1.8, 1.7% would be the economic growth, which is, again, lower than, as I said, before pandemic, but coming back to the track, right? So economy is going to be fixed. So that's the lesson, that economy is going to be fixed very soon now. What about inflation? So inflation, as you know, is the biggest fear for Bank of Canada. As we have talked about this many times, Bank of Canada will choose recession anytime over inflation. Inflation is the worst disease for any economy, even worse than recession or unemployment. Because normally a typical recession lasts for about 18 months, right? And then it comes out of the recession. And during worst time, the unemployment can range between 5 to 10%, which means if 5 to 10% people are unemployed, other 90 to 95% of people are still working. So it's not impacting everybody. So we can still live with that, right? But inflation hits everybody. So that's why Bank of Canada doesn't want to see this inflation to be there, right? So what Bank of Canada is trying to do to control it, they are trying to control the interest rates, right? So now this is how the inflation has gone in the last year or so. From January, it was about 6%. Keep in mind, it was about 8% in 2022, right? It came down to 6%, then started coming down as the interest rates hike started working. And then, as we all know, in later part of or middle of 2023, around June, it came down to 2.8%. And that's where the Bank of Canada said they will decrease interest rates. That backfired. And then they have to again, and then inflation again went up. So they have to again control and raise interest rates to control this inflation. Now it's again coming down to around 3%. How much it would be in next couple of years? So this is another graph, very interesting graph by Statista, which is showing the relationship between the interest rates and the inflation. The black line is interest rates and the blue line is inflation. So whenever inflation goes higher, as it went up in 2018, as you could see, it bumped up. So inflation went up, then Bank of Canada increased interest rates. A little bit of an increase in interest rates brought the inflation down, right? And then they kept these interest rates higher, and the inflation was controlled, and it was around their target of about 2%. And then, as we all know, they have to drop these interest rates because economy really slowed down. That was pandemic. So during this pandemic year, they dropped these interest rates to 0.25%, and inflation started growing in later part of 2020 to 2021. But I want you to look into this gap between interest rates and inflation. This is a huge gap. Bank of Canada actually didn't take action in time to control this inflation when it was growing faster. Remember late 2021 or early 2022 when everybody was saying, oh, inflation is translatory. It will just pass by itself. We don't have to do much to control it, right? But they were wrong here. So they went wrong. They let this gap grew too much. But now, then they took action. They started taking action later 2022, and they raise interest rates now very quickly and very fast and very much. So because of this big hike in interest rates, yes, inflation again dropped back. So now in 2023, we are hovering around between 3.5% to 4%, right? But their target is still 2%. So which means they'll have to keep these interest rates there. They have to keep this gap again longer. Now, interest rates are higher, inflation is lower. But they have to keep this gap lower for longer to keep it under control. You know, Bank of Canada is like your family doctor. If you have a bug, for example, say pneumonia or something, they want to give you some medicine to control it. And that medicine is interest rates, hikes, right? But as you know, maybe 3 days, 4 days down the line, once you have taken that medication, your bug is under control. And you say, hey, I'm done. I should stop, right? I don't need more medicine. But the doctor would say, no, we need to give this medication. You need to finish your bottle. You need to continue to take this for another 3, 4, 5 days because they don't want this bug to come back. Same thing here. Now, Bank of Canada would keep this interest rate longer, maybe another 3, 4, 5, 6 months before they start decreasing it because they don't want this bug of inflation to rise again. Right. But keep in mind, bank or Canadian inflation is easing much better than anywhere else. Right. So we are doing better than other countries. Right. Now, let's look into what is prediction for the inflation going forward. So this is a graph of inflation from 1987 to 2028 as per Statista. So there was a huge inflation in 80s where, and if many of you may remember or know that inflation was higher and interest rates during those periods used to be around 17% to 20%, even 21, 22%, right? So they raised the interest rate to that level to bring the inflation down. And then inflation came down and hovered around 2% to 2.5% for a long period of time. Right. So yeah, sometimes it goes up a little bit, then they make some adjustment and bring it down. So their target is around 2%, and it was hovering around 2%. Except when we had this huge jump in inflation. In 2023, average inflation is 6.8%, or 2022, sorry. This is not the inflation for 1 month. This is the yearly inflation. So keep in mind, we had gone up to a height of 8%, but average inflation was 6.8%. Then now in 2023, they're expecting it to average it come down to 3.62%. From 2022, 6.8% average annual inflation rate, and 2023 will be 3.62%. Going 2024, average inflation will be 2.43%. And then 25 and onward, it will be closer to again 2%. So that's the Bank of Canada's target. And we are on track as per Statista. So inflation is getting back on track. Economy, as we discussed, is getting back on track. Inflation is also getting back on track, right? What's the third factor? What's the third economic factor? Interest rates. So interest rate is the most impactful economic factor that directly controls the housing market. You know why? Because mortgage is the biggest loan that average Canadian will have in their lifetime. Because of interest rates, our real estate market actually varies a lot, right? That's the biggest factor, as we say, right? And as we know, what happened to the interest rate recently, our Bank of Canada's governor, again, Tiff McCollum, he has again changed the interest rates. He has kept the interest rates at the same level of 5%. So this is the fourth time in a row that he did not change interest rates, right? So, and most importantly, on that day, on January 2024, January 24th, when he announced this interest rate, he said, this is the main point we have to keep in mind, that now they're shifting their goal from how high to how long, which means they're saying we are not going to increase it anymore. We know we have done. But how long we want to keep it, that's probably the big question. That's the question mark, right? So this is again showing that they have kept this interest rate at 5%, fifth time in a row, or they didn't change four times in a row. So no change in the interest rates in the four times now. Now, it seems unlikely that interest rates will increase anytime soon. So we are not going to increase. So that's almost done, right? Most experts are predicting that the rate cut will start happening sometimes in the mid 2024, right? Whether it's June, May, or July, August, somewhere in that point. So almost everybody is expecting it will start cutting down interest rate sometimes during the middle of this year. And also Bank of Canada's governing council, they have also shifted their stance. Now they are saying they're prepared to raise the rates further if necessary to when they should be lowered. So initially, if you remember, they were saying they would raise the rates if needed, but now they are saying they'll keep it longer if needed. So the stance have changed. They're not saying they'll raise it anymore. They're saying they'll keep it longer if needed. So that's the new stance from the Bank of Canada. Now, very interesting. Canadian banking system. I know uh, we have been criticizing Canadian banking system. We have been criticizing Bank of Canada. And I take like also responsibility that we were also saying in our seminars as well that, hey, why are they having this stress test? We may not need it any longer, right? But I would say kudos to them because of their persistence, conservative approach. Our housing market is in a much better situation than it would have been, right? Because they didn't let people go and buy at will when the big pictures were rosy. They kept the pressure on, they kept the stress test on, and it helped to save our real estate market. You know, when market shifted in US in 2008, recession time, when there was a big, that recession, everybody knows. During that period, Florida had 3 years of supply. You know what does mean? 36 months of supply. You know, we talk about months of supply, and I showed you a graph in the beginning that we have about 3 months of supply in December 2023, January 2023, or 2.4 months of supply in January 2024. During worst time in US history, they had 3 years of supply, 36 months of supply, which means no one was buying homes, or very few people were buying homes, and there were so many people who wanted to sell. And that's why, as you know, US market plummeted, right? And that's why we don't expect similar situation here, because our banking system is much more conservative here, right? They have controlled it, and that's why we have saved it. And now they have already, interest rates have already started coming down. So let's keep in mind, fixed rate mortgages have already started coming down. Yes, variable rate or Bank of Canada's rate is not going to come down till mid to late this year, right? But fixed rate mortgages is already started coming down. What controls the fixed rate mortgages is the bond rate. So the government of Canada's bond rate have already come down about 1% from middle of last year to end of this year, or end of last year, or early this year, because bond rate has come down. So bond rate means normally bond predicts where the interest rates will go. So if they know the interest rates are going to go down, the bond rates will come down early. So as the bond yield is coming down, so the fixed rate mortgages are dependent upon the bond yield. It has already started to come down, and we are right now about 1% below the fixed rates that was available about 3-4 months back or 6 months back, right? And again, our mortgage brokers here can give you more details about that later on. So bond rates have come down, fixed rates have come down. What's happening to the variable rates? That's the big question everybody wants to ask, right? So Canada's variable rate is coming down in next 3 to 4 years. So right now we are between 6 to 7%, right? But by 2026, we would be between 4 to 5.5%. And by 27 onward, the variable rate should be between 3.5 to 5%. That's roughly the picture as predicted by Birch, which is a big mortgage company, right? So let's discuss the second factor. So economy we know is under control. The rates are coming down, economy is under control, inflation is under control. Supply, that's the second biggest factor which controls the pricing. And the two factors or two parts of the supply, resale homes and new construction. Let's discuss resale homes. This is what we have: new homes inventory, not new homes, new listings, sorry. So which means resale homes inventory year over year. As you could see, 2023, we had only 140,000 homes to sell, which is the lowest inventory in the last 5 years. So the inventory will go up a little bit this year, but not a huge lot. It's still lower than last many years. And the number of sales are also going to go up this year. So it will be even more tighter market as compared to last 5 years in a row, right? So as per, this is supply, resale home supply. Now, currently we have 2.4 months of supply only, which is seller's market. As I said, we had about 140,000 new listings in 2023, and we had 65,000 or 66,000 sales in 2023. We are expected to have 150,000 new listings in 2024 and 77,000 sales, which means we'll have more sales, about 12,000 more sales, and maybe 10,000 more listings, which means it will be even tighter than 23. So more tight supply than 2023. Now, let's discuss the new construction supply. So people normally say, hey, if there's not much supply in the resale, why don't we buy new homes? So new construction supply is definitely there. We are roughly between 4 to 6 or 8 months of supply in different segments and different markets, right? Which is buyer's market, right? Under 3 months is normally seller's market. More than 4 months, in GTA, we call it buyer's market. So yes, it's a buyer's market in new construction. That's why there is a lot of incentives going on in the new construction market. But pricing in new construction is much higher than resale in the same neighborhood. And that's why people are not buying. If you want to buy a house in any neighborhood in new home or new construction and resale, you would be paying probably 10% or even more in new construction than in resale. So that's why people say, why should I pay that 10, 15, 20% more? Let me buy resale. That's why new homes are not selling, right? Then the question is, why don't builders decrease the prices? Because builders' profit margin has also shrunk. They don't have much margin. How much margin builder have? Let's look into it. You know who makes the most money when new homes are sold? Government. They make 31% of the new home price. So if a home is sold, say, for $1 million, 310,000 goes to the government average, and builder's margin is only about 100,000. So builder cannot drop too much. So if we say builder should drop the pricing, they don't have room to drop the pricing, right? So that's why now let's discuss the demand. So the next factor, or the third factor, which we know, is demand. So demand is increasing. You know why? Because the population is growing. We got last year 1 million new people in a country of about 40 million people, which is a substantial growth. Like 1 million new people or 1 million population was added into a 40 million population. That's a very significant addition to the population. In Ontario alone in 2023, we added 500,000 people. So this is the graph showing the population growth in Canada. As you could see, our population is now growing exponentially or very fast, right? This is Ontario's population is growing. So as you could see, in 2022, we had about 350,000. In 2023, we had about 500,000 new population or new growth, population growth, which includes all new immigrants as well as either refugees or non-permanent people coming to the country, including students, right? So then the big question is, why do we need these immigrants? Why do we need these people? Because if we are having this trouble, why don't we slow down in the population, which is the big question being asked by everybody. The biggest reason is our population is aging, which means we'll have less workforce without new immigrants. You know what? Canada's population, which the biggest share of the people is now 55 to 64, rather than 15 to 24, which is the young skilled workers. So we don't have those people anymore. This is a graph that shows, or this is a slide that shows, in 1960s, we had 2 times more these young people, which is ages between 15 to 24, than older people, 55 to 64. So they were 2 times more. In 2021, we are only 0.81, which means we are lesser young people than older people. So older people would not work too long. We need these young force to keep Canada growing, to keep the economy like active, to keep the workforce there. So that's why we need these young people. Without these new immigrants, without these young people, we wouldn't be able to support. Then why don't we make more kids, right? It's a common thinking, hey, why don't we have more kids from our own country? You know what? Our birth rate in Canada is now only 1.4 per woman in 2020. And we need 2.1 to maintain the same number of people, to maintain the population. So which means we have no choice without immigration. You know what? The developed countries like Japan, Italy, Greece, they are right now going through negative population growth. And China's population is also decreasing. They reduced 1 million people in the last 2 years every year. So 2022 and 2023, 1 million lesser population, right? So now, when these new immigrants come, what do? They want to buy homes. This is a survey which shows that Canadian-born people, 9% of them said they want to buy homes, whereas the immigrants, 21% people want to buy homes. So the new immigrants, when they come, what do they do? They want to buy homes. So ultimately, homes demand is going to rise no matter what, right? So there's no easy fix between the supply and demand. CMSC has estimated that we would be 3.5 million homes short by 2030, by end of this decade. And the biggest gap is in Ontario, where we live, right? So this is the gap in Ontario. In 2022, they were saying we'll be short by about 1.85 million. Now they're saying we'll be short by 1.5 million homes. This is keeping in mind all the homes being built. So we'll be short by that many homes. So what's going to happen? How high the prices will go then? So yes, if inflation will be controlled soon, as we know, we have discussed three factors, which is first is economy, which is inflation, which was well controlled. Economy is coming back, rates will come down, then population will keep growing. Supply can't keep up to the demand. Guess what? Home prices, which are flat now, they won't remain that way for long because this is the rule of supply and demand. If there's less supply, more demand, doesn't matter what we do, the prices will keep on going up or will go up. So prices will go up again once the dam is opened up. Multiple offers have already started again. Did you hear about this house? There was 85 offers on a house, on a semi-detached house, uh, last week or a couple of weeks back in Mississauga. 85 offers on one house. Toronto listings are again having multiple offers. There's more heat on the horizon, right? There was 13 offers in one house in Toronto. There was another house actually in Vaughan townhouse that was sold in mid-January or late January, which had 30 offers. So we are now again getting into those multiple offers, although they are not as common as it was in 21, 22, but we don't want to be there. Probably, hopefully, when the market opens up, we would have a little more supply and it will balance out, but the prices will go up. So Remax is expecting a sluggish growth in 2024. Royal LePage, as per Royal LePage, they are expecting Canadian or freehold housing to grow about 6% and condominiums to grow about 5% in 2024. And that will happen in the later part of 24, second half of 24. You know why? Because that's when the interest rates will come down. So most appreciation will happen during the second period of 2024. Aggregate home prices in Toronto will go up around 6%, Montreal about 5%, and Vancouver about 3%. That's as per Royal LePage, right? What's our Toronto Real Estate Board saying? Now, Toronto Regional Real Estate Board has come out with this market outlook just a couple of days back on February the 8th. As per them, we'll have 77,000 home sales in 2024. We'll have 150,000 new listings, which is about 10,000 more than last year. And average home price by the end of this year will be 1.17 million. You know what's the average home price right now? About $1,025,000. From $1,025,000 to $1,017,000, it's almost like 9%. So Toronto Regional Real Estate Board is saying will grow maybe around 8, 9, 10% this year. Right? So that's as per different experts. You know, as Robert Allen has famously said, it's a famous real estate quote. We say, don't wait to buy real estate and wait. So book your one-to-one meetings with us to get more information about this, and we'll open to our Q&A session. And don't forget, today, by the end of this session, we'll have our draw, right, for the $100 gift away. Thank you, everybody. Now is the time for Q&A. You know what, before I know anybody wants to ask their questions, let me quickly ask our expert mortgage panel, your take on these interest rates. Are we in line what we have in the seminar, or anybody have any different opinion?
Sam, I can take a shot at it.
Yes, Kishore.
Yeah, it's in line. It's in line. You're right. This year did start off with a very, very promising start with those fixed rates dropping just like you showed on the chart, right? Yeah, and you're very correct that there's a lot of resistance on the variable front. But definitely a much more promising start than 2023. I feel the momentum, like you said, the number of pre-approvals that are coming in and people are ready to not miss the boat again is very high.
Yes, yes. No, that's well said. Thank you. I am happy that I think we are on the right track. Anybody, maybe Bhavin, what do you say on RBC point of view, or Dinkar, you can come on and tell Scotia's point of view.
Sam, similar to Kishore, same thing. We have started getting these pre-approvals, and it seems like we are going back to the similar market. Not similar market, but clients are getting impatient now and looking into purchasing. So, which is actually a good sign for real estate.
Very nice. Thank you. Amit, what do you take?
Just like the Bhavin, Kishore, and yourself has said, we're seeing a lot more transaction coming in purchases actually. So we have a lot of people who actually have taken advantage of the, we could say this is hopefully the bottom line on the prices, and
Yes.
I think we're going to see a huge intake on people missing out because of the rates dropping even more and the purchase prices increasing.
Great. Great. Thank you. And Dinkar, you want to jump in and give your Scotia's preview?
Well, actually, Sam, I'm very, very amazed, like so much information you gave. And there's not much we need to say, I think, because you gave most of the information. But as Bhavin said, Kishore said, Amit said, a lot of deals are coming in, and we are working on it, getting everybody approved. And interest rate wise, the fixed rates, everybody knows they have come down, as you said as well. And with Scotia, they are in the last, I think, 1 month, they brought down about 60 to 70 points.
Wow.
Which is a lot, which is very, very, and they're there to do deals, as I guess all the other banks as well. But we are getting them approved, and they are pushing as well.
Wonderful.
So very, very, I think I got more information than from you. I think from the bank.
Thank you, Dinkar.
Very well said. Thank you.
Thank you. Prerna, your view?
Yes, Sam. Definitely, our sentiments align with you, whatever you said, and it's absolutely correct. I have on the broker channel, I've seen another trend. Now, lenders are calling us back and saying, "Oh, you know what? This person was not getting qualified 2 months ago, 3 months ago. Do you want to bring the deal in now? Because fixed rates have gone down, and we can get them qualified." So that I have seen that as well. So definitely rates have come down, and clients are coming back, and everybody wants to buy now.
Very well said. Thank you. You know what?
Yeah.
That's the good news, which Prerna has said, that now the lenders are coming or calling back our mortgage brokers and asking them, "Hey, do you want to bring that deal back, which was not qualified a couple of months back?" So which is a good sign for the buyers, right? But also keep in mind, this means the market is heating up and will heat up more. As I said in my presentation here as well, that our prices are still not there. They're still much below than last year, the couple of years back. So which is the best time, right? So when is the best time to buy? When the prices are low. Yes, you would be paying a little bit more interest rates than you might be paying maybe 2, 3, 4, 6 months down the line, right? But you would be paying much, much more in terms of the price. So it's a trade-off. Great. So thank you, all the mortgage brokers, for your wonderful insight. And anybody have any question from the floor? Neelam, did you check the chat if anybody has put any questions in the chat? Can you check that, Neelam?
Sam, if nobody is there, I have one opinion, if you don't mind.
Sure, Pratish, go ahead.
So, thank you for your good information, but I have a question. Like all the Canadian job market.
Mm-hmm.
like average income is not increased last couple of years. But if you look around last 6-7 years back, the same house, what was the price was and what is the price now, even does not matter bank how much interest rate again go down.
Mhm.
But if you think as in Canadian people whose income is only the job,
Mhm.
they cannot afford this kind of price. Only immigrant people, they may have money.
You know what, Pritish, I agree with you. It's a gap which is widening between the people who have the money and who can afford houses and people who want to buy houses but they don't have money, right? The gap is widening, and that's where the interest rates play a very important role, because why people were buying like left, right, and center during 21, 22, because everybody could afford it because of the low rates, right? But now the rates have bumped up too much, and that's why people are not buying, right? But keep in mind, we live in a world where not everybody could afford houses. I believe we mentioned that in our last seminar as well. There are countries, go back to like US, go back to any developed country, right? Go back to even India, go back to China, go back to even Singapore. House prices are much higher than in Canada. And income there is not equal to or more than us. It's not that they have much more income. It's only people, because housing supply is always limited. Not everybody can buy a house. Canadian dream was different. We wanted to make houses more affordable, and we have been the most affordable country in last many years, but not anymore. That's the hard fact. So people would have to pay more money to buy homes, but also keep in mind, we are getting a lot of these new immigrants, as we discussed. And guess what? These immigrants are not coming empty-handed. They're bringing a lot of money with them. And that's why only 9% Canadians want to buy a house and 21% new immigrants want to buy a house, because they have more resources.
Yeah. The immigrant, they have money.
Yep.
So they are playing the market.
That's right. And our immigrant will keep on growing, as we just demonstrated in our presentation, right? You know what? I'll say one more thing here. What I would like to do is, I know in most of our seminars, I am the only one who gives presentations and I give my opinion, and I'll be very honest with you, I'm not the smartest guy in this group. I'm not, right? There are many more people who are more smarter than me in this group, who are either investors, who are either other professionals, mortgage brokers, financial analysts, more like we have a wealth of intelligent people in our group, right? So what I am planning to do is I'm planning to do another seminar, next seminar maybe, where I would like to have a small presentation or small insight from other people as well, right? And let's see what other people have to say. So maybe that will be a different format we want to introduce. And I might send you like invitations, and anybody who have any insight who want to give maybe a 3, 4, 5 minute presentation, and maybe we have 4, 5 presentations from different people. Maybe that will be another way to show more knowledge in our group. How about that?
That is very good idea. And I just want to say one point. You mentioned the 9% and the other 21%.
Yes.
If the people wants to buy a house, that will be the main points, because that 9% will be go down more, but other percent will be increase, and those people has lots of money.
Yeah.
You
No.
know.
Yep, you're right. You're right. That's where it's happening, right? We deal with them, and again, our mortgage brokers know how many deals these days we do, which are more like people paying 20% or more. Maybe one of our mortgage brokers, maybe Amit, you want to chip in, or Prerna, are you seeing more people going conventional way or non-conventional way?
Sam, I'll chip in. Yeah, more people are 20% down. I would call it a good 70, 80% at this point. Yeah, at least for my side of the business. Just because there's limitations in high ratio to qualify. Yeah, rates are low, but there's limitations to high ratio qualify. And secondly, there's limitations to purchase price as well, to what maximum they can buy for.
Right. You know what? That's another good example here that now, like 10 years back, 5 years back, even a couple of years back, people were buying with 5% down. Most people, right, Kishore? Would you agree with that?
I would say yes. Previously, the distribution of insured and uninsured or conventional deals was more evenly split at one point, and after CMHC took the new positions of the 25-year amortizations and the tighter qualification, it started changing.
Right. You know what that's what means is people are having more money to buy homes. People with money are buying homes, in other words, right? I think that explains it. What's your side of story, Amit? Because these two are bank side, Kishore and Bhavin. On the mortgage side, or broker channel side, maybe Reina or Amit. What do you see?
For the clients that we're dealing with, I would say that 95% of our transactions are 20% or more down. I think one big key thing also is that when we were at the peak of the pricing, majority of the purchases were over $1 million. So you couldn't even qualify with less than 20% down.
Yes.
Right. Bank of mom and dad is still a big thing that's helping a lot of individuals still get into the market today. Right. And that's one thing that not a lot of people discuss or even remember because it feels so long ago.
Awesome. Great. Great. You know,
Yeah, I would say the same thing on the broker channel because we do all the A deals and B deals as well. So I see more than 20%.
Good, good.
Yeah.
You know, I think everybody's on board that now we are having more transactions where people are putting 20% and more.
Yeah.
And Amit brought up a very interesting point, and I just quickly want to discuss that as well. Amit said more parents are chipping in, right? So as Pritish, you said, where's the money? You know, that's another factor. You know, Benjamin Toll, our CIBC economist, very interesting guy, he has said this is a time where transfer of wealth is taking place from people like baby boomers to the next generation. So there's a lot of wealth, baby boomers, which are people who were born 64 and before. Those people are sitting in on a lot of money. Their houses are paid off, most of them, right? And they have huge growth in their real estate values, and they have a lot of money. And they are now almost retiring or at the stage of their life where they want to transfer wealth to the next generation, and they are helping their kids or their grandkids to buy homes. So that's why more people are buying homes with more down payment as well. Great. Mohit has one question here in the chat. He's saying there was a rule about bidding process being more open and transparent if the seller is on board. Do you see it happening? You know, that was a new rule that was introduced in December, where if the seller agrees or the wants, he can show the pricing of all the offers, like he can make it an open bid, where he can allow the prices to be disclosed. So as a listing agent, if I am the agent for the seller, and if my client allows me, I can divulge the price of the offers to everybody. But it's not happening. And it's not going to happen here in our market. You know, reason why? No seller want to disclose and say, hey, if I tell them I have, say, 2 offers in my hand, which is say $1 million, the next one will come and say, okay, I'm going to give you $1.5 million or $1.1 million. But if it's not disclosed and it's happening, if they know there are 3 more offers, so instead of coming $1.5 million and $1.1 million, they might come $1.25 million or $1.30 million. So that's why sellers are not on board yet. And there's another chapter to this. not only sellers have to agree, buyers also have to agree that they allow their offer to be disclosed. No buyer want their offer to be disclosed because they don't want their offer to be used by the sellers to get more money from the next buyer. So if the seller allows, the buyer has an option to write in their agreement that if you allow or open my offer to other people, my offer is null and void. So that's why buyers are not on board, sellers are not on board. So the business is as usual before. So that's Mohit, as per your question. I hope I was clear.
Hi, Sam. I have a question.
Yes,
This
Sam.
is Sam Gujjar. So this is based on the recent publishing of the Canadian Mortgage Charter, where I am looking at the two different points. Is during the renewal now, they mentioned that if you switch the lender, then you probably will not have to go through that stress test where they would actually try to see whether the person qualifies with additional 2%. And second thing is they would be a little lenient with respect to increasing the amortization period temporarily. So I would like to maybe understand from the mortgage brokers, is that happening, and that leniency is for any specific criteria or for across the board, or how does that work?
You know, Kishore,
Sam, I can give it a shot. Yeah. So Sam, the requalification of that clause only applies to insured mortgages. So if you got a CMHC mortgage and you're already stress tested at the time of application, at the time of renewal, should you want to change to another lender, it's only for those particular mortgages, not for conventional deals.
I see. Okay.
Okay. And your second point regarding the leniency with the amortization, that's a very gray point, and to us it was explained as in times when you're over amortized or due to a major event you defer your mortgage, like how the banks did when the pandemic happened, and when everyone deferred it, your amortization goes up, right? So that's the leniency that they're referring to.
I see. Okay.
right?
Yeah.
Great questions and great answers. And any questions for our real estate lawyers or insurance brokers or more financial advisors? Any last question before we do a draw, as we have the draw today and time is almost running out. We want to do a draw as well. One last question, if anybody has for other expert panel before we do a draw.
Mortgage, but he has to be specific to ask a specific question. He just put it, please tell us about the mortgage, but Ravi, be specific and send it to Sam and he will answer that. And we are really running short of time. People are leaving, so we have to move to the draw too.
Yeah, you know what? Let's do one thing. Let's do the draw first. And after that, we might be open for another 5 minutes. Anybody have any questions? We can do that and be respectful to everybody's time. Let's do a draw so that someone can win, right? And then so as you all know, we have sent one question to everybody to answer, and anybody who have answered that question, their name has been added into the draw, and we are going to draw that name. So I'm going to open our wheel. So let me share the screen again. Okay, everybody. So this is our wheel of names where all the names have been added from the people who have entered into the draw. And we are going to draw one lucky winner for today. And the lucky winner will be wow, Daljit Singh Sidana. Daljit ji.
Oh, wow.
Are you present?
Yeah. Thank you, sir. Thank you. So nice of you.
Congratulations.
Thank you.
Congratulations.
Congratulations, Daljit.
Thank you, sir. Thank you.
Congrats.
$100 gift card, and I'll get that delivered to you. And
Thank you.
enjoy your family day weekend with your family. And that's a small contribution from us.
Thank you, sir. Thank you.
Thank you.
Wonderful, wonderful. Great. Thank you, everybody. Now let's go back to our panel again here. So first of all, I know time is now already 11, so I want to respect everybody's time and everybody who attended today. Thank you for being present. Thank you for your time on this Saturday, wonderful Saturday morning. Very nice out there. I know people want to go out and enjoy as well, but I hope you guys had some nice information or good information. And as always, please take some action, right? So with that, anybody wants to leave, they are welcome to leave. But if anybody have maybe additional 1 or 2 questions, we can be open for another 5 minutes. But anybody who has to leave, I sincerely thank your presence today and thank you for your time today.
And take action is the best thing. Dreams come true when you get up and do your work.
Great. Well said, Neelam.
Thank you.
Thank you all. Have a good one. I gotta go for open house.
Great. Thank you, Haji.
Yeah.
Thank you for
Thank
taking
you.
Nice weather, guys. Enjoy the weather as well.
Thank
Great.
you, everyone.
Yeah.
And I wish you all the best.
Great. Thank you. So it was nice seeing everybody today, and I don't think that we have any more questions here. But again, if anybody have any other questions, please feel free to send an email or text to me, and I'll get the answers from our expert panel. And thank you for your presence, and have a great day.
Thank you, everybody. Thank you,
Yeah.
Sam.
Bye.
Thank you.
Thanks, Sam. Have a good day.
Bye. Yes, Vijay, you want to say something?
Thank you, Sam.
Thank you. Thank you, Deepak.
Have a good one, Sam. All right, bye.
Thank you.
Thank you.